There are some numbers that are puzzling on the debt clock, including the number for silver, and it has nothing to do with price. Let's talk about it as we explore. That's right. The first puzzling number is the U.S. national debt. It continues to climb at an alarming rate, and let's concentrate and focus our eyes on this number right here. The federal budget deficit is continuing to climb as well. In spite of savings from the debt clock, for the Doge clock rather, the Doge clock is showing savings increasing to the tune of $415 billion. But the thing is, that's a $3,702 savings per taxpayer. Of course, you wonder if that's real or if that's projected. But even as such, the deficit spending is continuing and the debt is climbing. Now we're going to focus on silver. Before we get into those silver numbers, when we think about silver, we think about a metal that has frustrated us, certainly, but it also has done fairly well over the past few years. There's no denying that in terms of its nominal price increase. Even when adjusted for inflation over the past few years, silver has done very well. The problem is we compare it with gold. And so, notwithstanding, that is the realm and the reality we must deal with. But nonetheless, if you buy silver on a continual basis over the past 5 years, or even sooner, even the last 3 years, and you've practiced dollar cost averaging, you've done quite well. And by the way, that reminds me of a channel sponsor. Summit Metals has a new feature on their website called Auto Invest. Essentially, you will automate your gold and silver purchases with subscription buying. But the thing is unlike some of those other organizations, you know exactly what you're going to get. You will be able to pick what you want, and you'll be charged on the first of each month. And you can cancel this at any time, and you can choose to either have them vaulted or shipped to your location. And it's quite an interesting and great new feature that they have with several selections that you can make. And you'll be charged based off of the live metal prices at the time. And by the way, Summit Metals is one of the few dealers who actually show the real spot price, the actual spot price. You don't see that very often. That's one of the things I like the best about Summit Metal. So you can see here's the gold offerings that you can add, and you can do one or multiples of these every month if you so desire. It makes it easy, and if you just want to purely stack by weight of a certain type and variety, well, you can do it by using the Auto Invest feature over at Summit Metals. Now let's talk a little bit more about silver. Silver is a metal that is finite. In other words, there's only so much of it that will be mined each year. And so that compared to the US M2 money supply, well, that's a different matter. And so when you think about those two things, let's get back to our debt clock and see exactly what this $1,045 silver means. That is a ratio. There it is. And there it is right there. It's the dollar to silver ratio. Now, what does this mean? I'll zoom in a little bit more on this because I think it's important to understand this. It is the M2 money supply year over year of the M2 money supply. That's the measure, the most popular measure of how many dollars are either printed or digitized every year over the annual production of silver every year, according to the United States Geological Survey. And that number has gone down. It was over that before. It's been a little while since I've done a video on this, but it has gone down, and it should not have gone down. Why is this puzzling to us? Well, we get our answer right here. This is the Fed chart here. St. Louis Fed has these data that shows the amount of money that's been building up here since quantitative tightening really kind of stopped here in October of 2023. It's just continuing to climb up here. Now, if we zoom out a bit, we go back and look at this thing further back. For 5 years, you can see how much has been injected into the money supply for so long, and the tightening has really been very little. There's a lot of money being printed, and you can see over the course, since data have been collected since January of 1959, how much was substantially created during the pandemic period. And it's just continuing to skyrocket, and now we're back up to where we were before. So this is puzzling to me. While that number has gone down, why has the number gone down? I don't get it. But couldn't only be really one reason why, I would think. In fact, it puzzles me considering an administration who has been focusing on trying to cut spending and curtail government growth. It appears to be that money is continuing to be spent and taken in, but of course there's not been any legislative action to reverse this process, just what can be done through executive orders so far. So all of these dollars, I guess, are still being allocated and adjudicated and put forth for spending. Spending. That's what government likes to do. Government needs to be cut at least in half, not more than that. And I don't think the Doge efforts are going to put that much of a dent in all honesty, because we have no idea what true austerity means in this country, and it is much needed. We need to do this because of this kind of crap. They just keep printing money like crazy. But now let's take a look at what the USGS has for silver. And I think this might be our answer, folks. This very well could be the answer to it all. And that is the mining production year over year. Now, I think they talk about the world mining production, but they just show stats here for on a monthly basis or periodically, maybe even a quarterly, that we see for U.S. production. And we can see here that it has gone up since November of 24. Mining production has gone up in Nevada and other states. And so that tells us something. Now, the other thing that may skew some of these numbers is the amount of imports of silver that has come in. And some of these data are down here that show you how much has been imported and exported as well. And I won't bore you with, you can kind of see some of these numbers here, but you can see what it was in the previous months, kind of what it is now. It's kind of about the same over the last couple of months here, but we really won't know annually what's happening for the next while. But nonetheless, that those could skew some of the numbers here. But this chart, I think, is kind of interesting because this gives you an idea of price in dollars per troy ounce since January of 2023 to kind of where we're at in January of 2025. And the average price over the course of that time has gone up. It's been doing well when compared with itself, as opposed to gold being compared with gold. So I think that is a promising thing here. But, one thing is for sure, silver is a metal that even if production is increased in time, it's not, there's only so much more increased production that can come out of it. And how much is going to be demand, how much is going to be used. All of that is going to either support a sort of a baseline price for the metal, even with some volatility in the markets. We're going to see some of that. That is going to continue. But nonetheless, when you think about what that ratio means overall, when we look at this number again, 1,045, that's a ratio. It's not saying that silver is going to be $1,045 an ounce. It means that there's 1,045 of these paper dollars for every ounce of silver mined year over year. That just goes to show you that that silver indeed is much more rare than the fiat currencies behind it, and that's why that's inflation. That kind of describes inflation, when the increase in the empty money supply is going to perpetuate this inflation that we've been seeing. So there's that. This number here also tells us a little something. This is another ratio, and it's 375.3 to 1. That's the paper to silver ratio. In other words, that's how many derivatives there are for every 1 ounce of physical silver there is. This is actually a pretty suppressive element to silver's price. Yea, though, when it was first introduced in 2006 with the SLV, it actually was a something that actually increased and helped prop up the price. And it manipulated it to the upside, much as did the ETF for Bitcoin to cause the Bitcoin's price to go sky high. And but nonetheless, in the end, no matter what the derivatives do, no matter what kind of system is in place around the physical metal, you cannot change the physical metal itself and the physical properties and the inherent properties that it contains. To me, that is why silver is so attractive. And when we look at the price of, or the ratio of silver over the past 5 years, you can see that it is much higher there because of what they have been doing. But the national debt is something that is going to continue to climb, and they've added some new numbers here. That supposedly will help some of this, like future tariff tax revenue, payroll tax revenue, but really all of that is muted compared to how crazy high the debt has gone. We're almost at $37 trillion, and it's crazy how fast it's going up, and deficit spending is the major culprit of that. All of that means that they are going to be funding programs, institutions, and the like that cannot be paid for by tax revenue alone. They've got to print money, and that's where the M2 money supply comes in, and this troubles me right here. This troubles me greatly, seeing that we're right back where we were at the height of the quantitative easing to infinity. Well, it looks like we had a little bit of a 5-minute break here, and then we're right back where we were. This is troubling indeed. So there you have it. Let me know what your thoughts are about this video, and I have a whole playlist of these for posterity's sake. I've left all those videos up about the silver to dollar ratio, and let me know what your thoughts are. Hope you found this video informative, insightful, and educational. Would like to extend a multitude of gratitude to each and every one of you for taking the time to watch, and encourage you to please rate, share, comment, and subscribe.